Welcome back, everybody. Today we're talking about a stock that is literally trash, Waste Management. I know that's a stupid word pun, but I like it, so we're going with it. Now, I bought Waste Management in December, added it to my dividend growth portfolio. It wasn't a great price or valuation at the time, but they'd been such a good, consistent performer over many, many years. They have an extremely wide moat in a highly regulated industry that they're really the market leader in my opinion. So not only are they in a business that has a high barrier to entry, but they're solving a problem that doesn't really go away. If anything, it's getting worse. And it's a service that's needed by everybody and mostly required. So all that being said, you would think I'd be in a really good spot with this stock as a long-term hold, but I'm not. And I'm going to tell you why. All right, so if we jump into Seeking Alpha, we see that Waste Management is currently trading at $164.42. Over the past year, they've been up 3.21% in year to date. They're up just under 5% at 4.71. They currently have a dividend yield of 1.70%. So if we look at the dividends tab, we see their dividend yield, their annual payout of $2.80 a share, their payout ratio of 47.54%, and a 5-year dividend growth rate of 8.69%. Now, it says that in terms of dividend growth, they have 3 years of consecutive dividend growth. I actually think it's higher than that because if you look at the dividend history, I think they're kind of miscalculating it because they had kind of an extra, weird one in 2018. So I think it's actually more than 3 years. And if we look at the dividend growth tab, we see that their dividend growth rate in the 10-year is 6.49%. In the 5-year, it's 8.69, and in the 3-year, it's 8.48. So those definitely are pretty attractive dividend growth numbers, especially when you see that they're above Waste Management's 5-year average. So it's an increasing dividend growth rate, which is good. So if we look at the profitability tab, we see that their return on equity is a little over 32%, which is excellent. And their net income margin is a little over 11%, which is also good, especially when you compare that to kind of their peers in their own sector. They're really kind of outperforming the sector there and even outperforming their 5-year average. So that's a positive. So if we look at the momentum tab, I already know the answer to this, but I just like to see if these stocks have ever outperformed the S&P 500. And in Waste Management's case, the answer is absolutely yes. The 5, the 10, and the 30 are all outperforming by quite a bit. So now that we got some basics about the stock, let's talk about the business a little bit. So Waste Management just reported earnings and they missed on revenues and earnings both. So obviously the stock kind of took a tumble. They were trading up above 171, and after earnings reported, they kind of dumped down into the mid 160s. And one thing that we have seen is an increase in capital expenditures over the past year or so. And that's because they're heavily investing in sustainability growth projects. Now, let me explain what that is a little bit. Waste Management has a multi-year plan to invest in renewable energy and recycling to increase sustainability in their business and drive additional revenues and free cash flow going forward. And so their plan is to invest $2.2 billion in incremental CapEx over the next 4 years, targeting an increase of $580 million in incremental annual free cash flow. And while they're taking on that investment, they're still paying out dividends and they're still buying back shares. And it seems like they're taking on a little bit more debt to be able to do all that. As you can see, since December 2021, they've increased their long-term debt by about $2 billion. And while on the surface it may not seem like a huge deal, I think it's more of a question of if you're buying back shares at the current valuation and you're taking on a little bit of debt to do so, is it really a net positive for the company? Let's take a look at the valuation and see. Okay, so if we jump into the spreadsheet for Waste Management, we see the information that was pulled in. We talked about their dividend growth. We talked about return on equity, all those things. Their dilution trend is down. They're buying back shares. They have a wide moat, according to Morningstar. And yes, they've absolutely outperformed the S&P. So on the surface, this doesn't look terrible other than, price to cash flow is really astronomical in this case. But it's a decent start. So let's see where we get in the buy and hold. Just real quick, if you guys want to use the same spreadsheets that I use in my videos, I make them available completely free on my Patreon page. Check out the link in the description. Okay, so in the buy and hold evaluation, once I plug in the information for total common equity, as well as cash from operations, capital expenditures, dividends paid, and stock-based compensation, we get to this fair value price per share of $53.15, which is well below where they're at. Now let's take a look at some of the assumptions that I made. In terms of the starting cash flow, I used the most recent trailing 12 months instead of the average just because it's been pretty consistently growing, and so I think that's a more reasonable starting cash flow number. In terms of the starting growth rate, I used 10%. The adjusted free cash flow growth rate has been a little bit over 11 here, so I'm using 10 just to be conservative. Still have my growth deceleration at 95% and terminal growth rate of 2.5. So I have my required rate of return here as 12, and I've explained in the past why that is. For a stock like Waste Management, that might be a little high because it is more of a defensive stock than others. But again, if I'm looking at what my required rate of return is compared to alternatives, I feel like it makes sense to keep it there. And then obviously we have a 20% margin of safety. Now, I know that these conservative inputs are driving that fair value price down, but my concern is that it's so far away from where the stock is trading at right now that I question the true value of the actual operations of the business in terms of, what it's worth compared to the current stock price. But before I overreact, I always want to look at the multiples valuation just to see if that's kind of in the ballpark too. So if we look at the multiples valuation, and I used Republic Services, Waste Connections, and Rollins as peers, we can see that it's actually even worse because the price to cash flow for Waste Management is not good. And now the price to cash flow that I'm using is incorporating CapEx and dividends paid, right? It's not just operational cash flow. So using that adjusted cash flow measure, puts them at 167.54, which is not good at all. And so that is really driving down their fair value price. So if we look at the analyst mean price, it's 177.84, which is quite a bit above what we got in our buy and hold and multiples valuation. And what worries me about this is that it's so off that, one, it makes me wonder, maybe the way that I'm trying to value the company is completely wrong, which it absolutely could be. Or two, maybe this just isn't the value that I think it is, or it's not the type of company that I need to put my money into, even though it's been such a great performer in the past, because the way that I value stocks or the way that I understand them doesn't really match with this business. Or it could just be extremely overvalued and it's Waste Management, so it doesn't matter. All those things are what I had to think about when I saw this. And I think what was the most interesting thing for me was the sustainability growth program update. And what I get interested in is, okay, I don't mind if you're using cash to be able to invest in your business, especially if it's going to drive growth or drive efficiencies going forward. But what I wasn't sure of is what was the expectation with their sustainability growth investments. And when I showed you that plan of, $2.2 billion over 4 years, I actually didn't know that information until I read their earnings report. I missed that sustainability presentation in April, apparently. And so once I got to dig into what their expectation was in terms of additional free cash flow, I got a little worried, right? They're going to spend $2.2 billion, and then beginning in 2026, they're going to start to see some of that benefit. And their target benefit was $580 million of incremental free cash flow every year. And while in general that return is not bad, what worries me is that we're 3 to 4 years away from seeing that potential benefit. Costs have been increasing, debt's been increasing, and the current valuation seems to be way off. And the crazy part is even if I plug those cash flows in, assuming that all their investments panned out and we got those cash flows today, the valuation still wasn't close to good. So if I update the cash flow numbers to include the full valuation, and I reduce the CapEx to a more normal level, it still shows the fair value price per share at under $100. So even if all the investments panned out and we got them today and got credit for them today and we hit the full target and all of it went to the bottom line, we're still well under a fair valuation. And I came away from this evaluation not being very confident in my position in Waste Management. So I sat there and I looked at it and I sold. Even though I think they are a great business, even though I think over the long term they'll probably do okay or even well. But when I looked at other opportunities out there, it was hard for me to justify continuing to hold on to this when the valuation is so far away from what I think is fair value. And if that price comes down, or if that fair value starts to move up a little bit to where it makes more sense, then I'll relook at it and maybe even buy in the future. It's just at the price that it's at right now, I didn't really see where that price appreciation was going to come from based on their current fair value and the prospects and investments that they have working right now. So if you're wondering what I did with the cash after selling Waste Management, the smart thing would have been to just wait and sit on it for a while, wait for some high quality companies to come down in price, and then pounce. That would have been the smart thing. That's not what I did. I ended up buying Apple at the top. But more on that in my next video. And if you guys want more videos about stocks and stock analysis, click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you guys in the next one. Peace.